Happy Friday, everybody. Well, I've gotten a lot of calls from people who are concerned about the Federal Reserve raising rates this year. Should they try and get ahead of it? Is it going to negatively impact their ability to buy? Will they have higher interest rates towards the end of the year than they will today? And the quick answer is don't worry about it, which seems kind of crazy, but there's a lot of things to worry about, but the Fed raising rates should not be one of them. And the reason why is because it's already baked into the cake. So as of today, there's about a 45% probability the Fed will raise rates in the next meeting, and nearly a 90% probability that the Federal Reserve will have raised rates higher by the end of the year than they are today. However, it's already baked into the cake, like I said. So if you are going to buy a product or service, and pick any product or service, and you could buy it whenever. You could buy it today, you could buy it in 2 months, you could buy it in the end of the year, and the timing of that purchase did not matter. Well, you would only buy it when you felt the price was going to be the best. Well, from a bond perspective, and what the bond market does is just that. It prices things in. So, yes, Federal Reserve policy is 70% of what drives mortgage rates, but it's already baked into the cake. So that means the bond market has already adjusted, interest rates have already adjusted higher for what the Fed is going to do, or in anticipation of what the Fed is going to do. Look no further back than last year when the Federal Reserve did the opposite. They lowered rates. And what happened during that time? Well, mortgages actually went up. So there is just as good a chance that when the Fed raises rates, mortgage rates could go down just as likely as they could go up. So don't worry about the Fed raising rates. It's going to be all about inflation. It's going to be all about the job market. That's what's going to drive mortgage rates. Now, as for mortgage rates, right now they're about 6.75 with about a half in points. That's the national average, 20% down, good credit. Of course, we'll always figure out ways to beat the market. But at the end of the day, it's been kind of a boring last couple weeks as far as mortgage rates go. Thanks for watching. If you have any questions about financing a home, give us a call. Happy Friday.